What's up, guys? Welcome back to the channel. My name is Bryan Carreto, and today we're going to be going over audit series number 7, performing fraud inquiries. I remember when I was a first-year staff, I was tasked to go do a fraud inquiry with the management team that I was auditing, and I had absolutely no idea what the heck I was doing. I had no clue what to do or how to approach it. So hopefully after today's video, I have a better idea if you're tasked to do this on your audits or you're just being asked to do this, I don't know, for a class, whatever. You kind of understand why we do fraud inquiries. Obviously, they are required by auditing standards, but again, if you're asked to do them, hopefully after you watch this video, it's a lot more clear what you need to do, why you're doing them, and how to approach them and how to document them. So let's start going through this. Okay, so what's the objective of fraud inquiries? So it's to assess the risk of material misstatement, and I'm going to move this over here. Oh, what the heck? Okay, move this over. So it's to assess the risk of material misstatements due to fraud. We obviously know from an audit standpoint, we have to do certain procedures. We have to test certain accounts because they are quantitatively or qualitatively material. That's something we decide during planning. But there's also certain things why we need to understand. Is there any other risk that we're not aware of, just based on quantitative or qualitative factors? And hopefully during these fraud inquiries, we can understand that. And really the goal of this is to understand tone at the top. You want to understand, okay, when you're speaking to the senior management or the controller or the accounting manager or even maybe the CFO, it depends. Typically, those are typically done by people more senior in your engagement team. If you're a first-year staff or you're senior, you're probably going to be doing it with accounting managers, lower level staff, accounts payable clerk, maybe the controller. But again, once it gets to senior management, not saying you won't be tasked to do it, but typically that's done by someone's more senior on your team. But really understand tone at the top, understand the company's objectives, understand where they're going, understand what certain targets they're trying to meet, and also to understanding their internal control environment. How are their internal controls? Are they strong? Are they weak? Is that something they can need help with? Does it lend itself to certain areas of fraud being in certain control areas, such as accounts receivable, accounts payable, certain things of that nature, main control cycles. So also too, the fraud triangle that I'm sure you learned in school, that I'm sure everyone has heard about. Pressure, opportunity, rationalization. Is there pressure, again, to meet certain financial objectives based on where the company's going? That would lend itself right to fraud. Opportunity. Is there an opportunity because of lack of internal controls, or they just don't have a robust control system in order to prevent certain things from happening? And rationalization. Rationalization would be something like, okay, well, the company makes millions of dollars. If I steal 5,000, is that really a material thing? So things like that, you need to just start understanding. But really the objective of it, again, is to identify any other risks that you weren't already have considered from a quantitative and qualitative perspective. And with speaking with management, you can understand where the company's going, their objectives, their internal control environment, and also to start asking yourself, hey, is the company trying to meet certain financial objectives that are really I lost my train of thought, that are really aggressive? And then that would lend itself to maybe them trying to manipulate revenue or something, right? So again, these are just things in theory that you need to understand. And once you start getting into practice, you'll really understand them a lot more. So continuing going on here. So who should auditors interview? So senior management, CEO, CFO, controller, those three are typically going to be required. I don't care what audit you do. You're always going to have to do the fraud inquiry with the CEO, the CFO, the corporate controller, accounting and finance staff. This can include the controller. This can include the accounting manager, the AP clerk, the AR clerk. Things are maybe a little bit lower level. Senior accountant, internal audit, especially if they have an internal audit department. Some private companies, most public companies will. Most private companies will not. In my experience, most private companies that I audited in my career, they didn't have a full-on internal audit department. But if they did, and I did have some of those in my career, again, the vast majority did not, but some did, then it's just good to understand, okay, hey, from your reports that you do every month, or, usually typically people in internal audit, they have to do their monthly assessment of whether certain financial segments or certain components of the corporation or certain areas or certain states or just certain areas of the company that they're going to need to do their internal audit procedures over. It's just good to get those reports read them, understand them. Did they have any findings? Do they have any recommendations to management? Just really start building that relationship and understanding what risk could be involved in a company. And then others, you can also talk to legal, HR, compliance if needed. But typically, you're going to be doing a financial audit. Again, you can talk to these people, but it's going to be mostly based on, again, CEO, CFO, controller, accounting, finance staff. I typically say in a given audit, you should probably have a good 3 to 4 people that you communicate with. And then it's also really good, the reason I mentioned others too, sometimes it's good to talk to people outside of accounting. Just to understand, sometimes, especially as accountants, we get so caught up with the numbers and debits and credits, and we kind of lose sight of other things, of other departments. So again, it's sometimes really good to talk to people outside of accounting just to get a better sense of the company. And again, certain risks that could be involved that could lend itself to fraud being there. Okay, what auditors aim to uncover? So really what we aim to uncover is pressure to meet financial targets, opportunities due to control weaknesses, rationalization again of unethical behavior because, hey, the company makes millions of dollars and I'm only taking, 5,000-10,000, or I created a fake vendor that I'm paying myself for certain things. Again, has these things happened in my career? I have uncovered certain things that have occurred. So these things do happen, unfortunately, and that's our job as auditors to really aim to uncover them. And then the purpose, identify risk, not accuse. This is huge. This is why I put this in here. Okay, so this is more so like, obviously I'm going over the theory and I'll go over the actual practicality of it, but you want to make sure when you go do these, you don't make them awkward. They're already awkward conversations as it is. So you want to make sure when you're doing these conversations, when you have these conversations with management, you want to make sure, especially if you're having it with someone outside of accounting, you got to remember, like, these people don't deal with auditors on a daily basis, right? And they might feel either offended or accused that you're even asking them, hey, have you seen fraud happen? Do you think there's any risk of fraud? They might really get defensive. So you want to make sure the way I would really start this conversation off is like, hey, I'm the auditor. I'm Bryan Carreto. I'm here from, whatever firm I'm coming from. By the way, this is just a standard procedure. I have to do it. It's not like I'm not accusing you. This is just a conversation. If you can let me know, this is just, again, standard fraud inquiries that I have to do from an audit perspective. Make sure if you frame it that way, like that first thing you say, for whatever reason, in my experience, it's always a much simpler, smooth conversation than you just say, hey, do you know if there's fraud? I mean, right away, they're going to be like, what the heck? Is this guy accusing me? Like, am I losing my job? And again, these are people's livelihoods, right? So we got to be tread lightly around this conversation, but at the same time, we have to do our job and we have to be auditors. We have to be diligent, but there's certain ways to finesse it. And I think that's really, if you ask me, that's really the key to being a good auditor and being a good accountant, is being able to work with your clients in a way where, again, when you ask certain questions, you don't make them feel either dumb or pressured or like you're accusing them of something. So let's continue on. So I put some sample questions in here that you would ask management. What is your assessment of risk, of the risk of fraud? Are you aware of any actual or suspected fraud? How do you communicate ethical expectations? So again, these are just examples, but you can really just say, hey, look, my name is Bryan. My name is so-and-so. I'm from so-and-so firm. This is standard audit procedure that I have to do. I have to ask you certain questions about fraud in the company. And again, I'm not accusing you. It's just a conversation for me to understand what happened during the year, if there's any, and if there's any risk of fraud. So these are just, again, certain questions that you can ask, just sample questions you can ask management. Sample questions you can ask accounting staff. Any unusual journal entries or overrides, such as like, hey, has management told you to book this entry even though there's no backup for it? Is there pressure to meet targets or deadlines? Do they have to close the books at a certain time at the end of each month in order to meet certain deadlines with the private equity group or the owners or management? So that might lend them to say, hey, you know what? Like maybe we not forge some numbers, but we don't necessarily. Sometimes even fraud. Sometimes. It could be unintentional. It's like, hey, I didn't necessarily know that, but I had to reconcile my accounts receivable aging report to my balance sheet, and I somehow just booked an entry because if I don't reconcile, management gets mad at me or whatever. So again, it could be things like of that nature too. But again, it's just really good to start understanding, especially the type of questions you ask could be different, and that's why I'm illustrating here at different levels of management, right? Management's going to be more high level. Obviously, the accounting staff are the ones that actually do the work. They actually post the entries, they review, and then they produce the financials that go up to management for review. And then internal audit, again, like I mentioned earlier, really good just understanding if they have any monthly reports that you can review, if they have anything else or any recommendations to management, response to misconduct or allegations, if they've uncovered anything during a year during their own local procedures, can you use them and leverage off of them and start building audit procedures around certain things that they already found out. All right, documentation and evaluation. What do you need to document? You should document the name, the title, and the date of who you had the interview with, the questions you asked, and the key responses. It's really good to just evaluate the consistency of the responses and any red flags that may have come up. But again, just from a documentation standpoint, you want to make sure you get the name of the person you interviewed, the title, whether it's CEO, CFO, controller, accounting manager, legal, HR, the date you had that, the questions you kind of asked them, the key responses, and how you evaluated them. And then again, consistency of responses and red flags for any follow-up. All right, next steps. Okay, so now let's actually go into an actual Excel. As you guys know, with all our audit series videos, we go over first the theory, which we just covered, and then we're actually going to go into a real life example of what you would document and what you would do in your audit software. So let's go open that up now. Okay, so this is something that I created just to kind of illustrate what we just went through right now, as far as how you're going to end up documenting your fraud inquiries and how you should do them. And again, every audit software is going to be different depending on what firm you're at. But this should be a really good roadmap as to how to do it. So again, as you guys know, with all our How to Audit series, we always make sure we make our work papers as aesthetic as possible. So we have CPA Advisors up here. Oh, let's take that one. CPA Advisors LLC. Fraud inquiries, that's just the title of the work paper. Again, your goal when you prepare a work paper is to get the least amount of questions possible. So we want to make sure we're as descriptive as we can. And then what's the date? 12/31/2025. So the purpose of this, let's go ahead and read the auditor note. You always want to make sure you add a purpose, procedures, and conclusion, or some type of note in general that lets the reviewer know, hey, this work paper is going to do X and this is the purpose of it. So the purpose of this work paper is to document inquiries made with management, accounting staff, and internal audit personnel to assess the risk of material misstatement due to fraud in accordance with AUC Section 240, considerations of fraud in a financial statement audit. Again, this is a standard audit requirement. We have to do these fraud inquiries, and it's really just letting them know, hey, this is the conversations and the conclusions we reached when we had the conversations with management, and again with CFO, accounting staff, and internal audit personnel. So let's go over the first one here. So we met with Jane Smith. who is the CFO of the company, on 11/1/2025. Area management, key questions asked. Risk of fraud, override of controls. We asked them, if there was any risk of fraud, if they thought there was any risk of override of their internal control system. And then summary of response, we noted, auditor noted no significant fraud risk. Additionally, tone at the top emphasizes ethical culture. That's what we noted from talking to them. We noted that, from talking to Jane Smith, she said they have a really high ethical culture. They have certain things within the company that allow them to maintain that culture within the company. And then we noted no fraud risk. Again, it doesn't have to be, you don't have to write some book, but it's just, again, this is really high level. Just something for you guys to start thinking about how you guys can do this in your audit work papers when you're either, again, whether you're doing like some school project or you're actually doing this on the job in real life. So, and then evaluation, red flag. No, we noted that the tone at the top was there. We had a great conversation with the CFO, who was Jane Smith. We didn't know anything weird or anything suspicious, anything strange. She was very straightforward with us. And then we just asked her during the conversation. We also asked her, "Hey, did you have any fraud during the year?" And then she noted no. So we can move on. Again, it's just documenting key questions asked and then the summary of our response. And then obviously again, name, title, and date. So the second person we interviewed was David Johnson. So who is the controller? We interviewed him. It looks like we scheduled all of them on the same date. So November 1st. Area, accounting management. And then we asked them, is there any revenue pressure? Do you ever have any late journal entries? What's your views on control environment? And then we noted, so the auditor noted there is some pressure to meet monthly financial close deadlines. We noted that, okay. Additionally, auditor noted there are occasional late adjustments, but all manual adjustments are reviewed by the CFO. So you see that? We asked them, hey, is there any late journal entries? Do you have any pressure to meet certain close deadlines as the controller? And we did note that. So then from our evaluation, we said, our evaluation, moderate, auditor will subject all manual journal entries to testing. So in order to address what we just noted from our response, we're going to be doing testing over all manual journal entries that we note during our journal entry procedure. So also testing journal entries is something that you have to do from a auditor perspective, and it's an audit requirement. But because we noted this in our journal entries, now we can add a criteria in there saying, hey, look, any journal entries made during the year or every month end, we're going to review them to make sure that they are correct, that they are valid, that they have support behind the journal entry. So again, this is how we're changing or addressing the fraud risk that we noted during the conversation by making sure that we test all manual journal entries. Okay, next person we interviewed a staff accountant on November 1st, 2025. She's a finance staff. And then key questions asked. Has management pressured you to record any unusual journal entries? That, again, this isn't the only question we asked, but it's a key question we asked. I'm sure we asked her, have you noted any fraud during the year? I'm sure she said no because we didn't document it. Have you ever had any pressure to book any entries? And then one thing we asked here, has management pressured you to record any unusual journal entries? And we noted, auditor noted no significant fraud risk and no unusual journal entries noted. So that's what we got from her response. Again, she maybe doesn't see the things that the controller just told us that at times there is a pressure to meet certain close deadlines. But again, we noted that was her response. And evaluation, there's really nothing to evaluate, right? There's no change in our audit procedures because of what she said, because what she said isn't necessarily strange or doesn't raise a red flag. So our next fraud inquiry we did it with Angela Smith. She is the head. Oh, look at this. We have an internal audit department. Great. Okay. So we have head of internal audit. We also did this on November 1st, 2025. And then key questions asked during the fraud inquiry. I'm gonna make this a little bigger. Key questions asked during the fraud inquiry. Is there any past frauds, investigations? Is there any whistleblower reports from the procedure that you've noted? And then summary of our response. Auditor noted one vendor fraud incident investigated and resolved. Okay, see, there was a vendor, they had a vendor fraud incident. So I don't know if someone in the company noted a fake vendor or something that happened during the year that other people weren't wary of. Auditor noted one vendor fraud incident investigated and resolved. Auditor noted that the company enhanced monitoring procedures and implemented a new vendor approval system to mitigate and address the risk. So this is great news. Obviously, it's not good news because, we noted that a vendor fraud incident noted, but the company now has certain procedures and controls in place to prevent this from happening again. That's what we want to see. As long as obviously sometimes management can't control everything, and there's certain things that they can do to implement a certain tone at the top, or implement like we mentioned in our first inquiry, they emphasize ethical culture, but there could be bad apples sometimes that happen. So by them noting this happening, and they implemented a system around this to ensure, or controls to ensure this doesn't happen again. That's a good news. And then let's see what we did from an evaluation standpoint, how we're going to evaluate it, and how our audit procedures might change because of this. So we said, auditor will perform walkthrough procedures over the new vendor process and judgmentally select 3 new vendors for testing from the new vendor list during the year. Okay, look, you see that? So now, because if you just document, hey, we had this fraud happen, and then you just say, well, this happened during the year, but yeah, everything seems good and we're not going to do anything. You're going to get a comment right away, I can guarantee you, because you're going to think to yourself, okay, well, if this happened, why aren't we going to do something about it? How are we going to address this fraud risk that we now noted from speaking to management, from speaking to these 4 different people? We noted certain things. How are we going to address this from an audit standpoint? And the way we're going to note that, and since we noted that there was, vendor fraud during the year, or someone was able to add a fictitious vendor, we're now going to perform walkthrough procedures over the new vendor process, and we're going to judgmentally select 3 new vendors for testing during the year from the new vendor list. So we're going to do walkthroughs, and we're going to obtain the new vendor list, and we're going to randomly select 3 new vendors to make sure the vendor process is accurate and it's timely and it's done and it's documented accordingly to the new management policy. So that's what we're going to do in order to assess that fraud risk that came up. And then just kind of summarizing what we did earlier too, where we noted that, there's certain pressures to meet certain close deadlines. They sometimes record late journal entries, again, in order to meet that close deadline. Well, what did we do here? Well, auditor will subject all manual journal entries to testing. So we'll get their GL data dump, and then during our GL roll forward and our JE testing procedures, we'll test all manual journal entries that the company made during the year to assess this fraud risk. So And those are the fraud inquiries we did. And again, there's no right or wrong answer as far as kind of like who you go interview. Obviously, you're not going to go interview just one person outside of accounting. You're going to have to do, CFO. I didn't document the CEO in here, but that's another one that we probably should have done. I probably would have left let's say I saw this work paper. I probably would have left a comment in here saying, hey, I know we talked to the CFO. Did we not talk to the CEO? Again, it's not something that, no, you know what? Yes, I'm going to say you have to do it. CEO, CFO, controller. We didn't add it in here just in our example, but again, this is a real life example of what you would do in a fraud inquiry. So you want to make sure CEO, CFO, and typically again, as the audit staff, as the audit senior, this is not something you would probably typically be doing. It's going to be either the partner or the manager or the senior manager on your job that's going to be doing this type of, going to be doing those inquiries for you, people at the CEO, CFO level, and typically controllers, staff accountant, senior accountant could typically be done by the staff or the senior on the job. And then head of internal audit, again, not a problem. That can probably be done by you also. But then again, this is really just for you guys to really start thinking about how you can approach this and how to start thinking about your fraud inquiries if you are tasked to do them on your jobs. Again, documenting the name, title, date, the area where they're in, key questions asked, the summary of their responses, and if possible, if needed, how are we going to address the fraud risk that we noted if there were any. So hopefully from this video you found audit inquiries more helpful. There can, again, just to let you know, this is something that's always a little bit strange and something that it gets, with time you'll get better at doing them, but it's just an awkward conversation to have sometimes. And again, I think you laying the groundwork at the beginning of the conversation and say, hey, you know what? This is something I have to do from an audit perspective. It's a requirement. This is just a conversation. I just want to understand if there was any fraud, or if you think that the company can address or increase certain internal controls to prevent these things from happening, or is there any opportunity to meet these certain things? Again, it's just really trying to understand other areas of the audit that we wouldn't maybe have addressed from a quantitative or qualitative perspective, and really understanding how the company is functioning and if there's anything we can do to address certain fraud risks that did occur during the year. So hopefully you found this video helpful. If you can please leave me a comment below if anything that wasn't necessarily clear or something that you're still kind of confused with. And yeah, until next time, I'll see you guys in the next one.